We're going to talk some trades with our man Basil Chapman. Folks, we talk to Basil every Tuesday at 3:15. You can listen to Basil's outstanding program, the Tiger Technicians Hour, every market day, 10 a.m. till 11 a.m. Eastern Time. You can check out his daily newsletter, The Opening Call. Now, Basil puts out updates every morning, folks, for the opening call. He puts out approximately an hour-long video every weekend for subscribers. So that's almost a webinar in itself. It basically is. And then, though, 2 weeks ago, he just did a webinar, folks. The outlook for 2026, what looks good going into the new year. You can sign up on the front page at TFNN.com for the opening call. You'll get 30 days. All products come with a 30-day money-back guarantee. You have nothing to risk, folks. You'll gain access to that archive webinar Basil did. 90-minute webinar, folks. 2 weeks ago, still very pertinent coming into the end of the year. And, Happy New Year, Basil. One more day. Almost 2026. Good afternoon, Basil Chapman.
Happy New Year. Happy New Year to you, and successful, rewarding year to everyone, and a healthy one.
Oh, well, that's no better way to say it, Basil. Thanks for all you do. Happy New Year to you, your family, and all your friends and family up there for sure. So, Basil, if we can kick it off, because, the webinar that you did 2 weeks ago today, maybe you could just talk about it again, because it's the holidays, man. I feel like people have already checked out from this market, rightfully so. Tomorrow, we still got a full day, but I know we got listeners, viewers that may want to sign up. Of course, they all gain access to the archive. If you could walk the listeners through, Basil, because I was there for the 90 minutes, man. Great webinar, but what'd you cover in that webinar? Because if you could just give them a little glimpse, please.
So there were a couple of facets that I thought were really important to get to as we were ending the year and beginning the new year. The most important was to identify and to demonstrate in what we had in terms of portfolio coverage that there was a huge move in certain areas that went to about October, even November of this year, and then there was a very sharp collapse. And many stocks some in fact we got down, and part of that was to try to identify that we attempt always to get the ictus, the little turn at the very bottom or the very top of a potential move, because that gives you a lot of leeway when I can call it you can call it velocity ends off that initial thrust to the upside, and then you get a lot of wiggling and shaking before you can get the next move. So that was very important. But most significant was that I identified that there were certain sectors that had fabulous moves. We were in some, we had huge gains in some of them, and then we took a little bits off, and eventually they came down, and we've got in some we got completely out, but in others we've held them like a Robin Hood because we got in so low. But the other issue was that there was a transition, and I never really heard anything in the news media about a transition. And the transition was that those industrials, the deep industrials, like in Alcoa, this is the heart of America, and here it is at a recovery high today at 54.52. We saw.
And Basil, if you could just refresh your camera real quick. It did that thing where it's up there, but if you could just refresh your camera for us in the your chart, please.
Let me do that. Okay, so let me just do this. So I'm going to stop streaming. I'm going to start streaming. I'm going to go there, and
just
that's the
quick.
chart. Okay, I think you've got it, right?
We are. I'm sorry. I'm pulling it up. I think you are.
Oh. It should be. I can see it.
Yep.
It should be good.
You're good. Perfect.
Okay.
Thank you, Basil. We're looking at Alcoa. Go for it, please.
So look at this. These are the patterns I talk about all the time, the cup formation or the double cup formation like a W. And 57.61 was the high back in January of 2023. And Alcoa comes tumbling down to 23 in October of 2023. Bam, it moves up and it fails and it comes back and it makes a lower at 21.53. So this arch formation, gosh, I wish I had time. I wanted to show you some other things, but let me show you this. So when it turns around, there could be a very sharp move to the upside. And I use this on the right side. That's the monthly chart. These two lines represent what I call the Chapman Wave inside track repellent zone, which becomes a pro-pattern zone. And look how it broke out so nicely. So here we are. We're within just a couple of points of an all-time high. But this is, I keep emphasizing, this is Alcoa. I mean, you can't get Alcoa rallying unless there's something going on deep in the economy, and you can see it because, look, there's General Motors. Another one that I identified real long from 71 is trading right now at 82, made a peak D. It's stalling a little bit, but it's only a leg B in the weekly chart and is broken out in the month. This is General Motors. Who talks about General Motors as being positive? Not all of them are doing it. That's the thing. You were speaking about selectivity, and I think you're absolutely correct. This initial period in January going to February is going to be very important to identify what you think is holding well, projecting higher prices, getting all the things that you look for, whether it's volume, whether it's the MACD, the moving average, convergence, divergence, or this beautiful technique that I developed years ago, the 914. Look at this, General Motors, in that big correction back in November when it went from about 73 down to 67, I think it was. Look, that 9-period moving average remained green, and when that green holds and the price goes back above it, it could be a big move, and it's still green. So that's very important. So what I want you to do was to identify sector change. In other words, you've got Alcoa, General Motors, General Electric. You've got a group that the oldies, I mean, this, as I said to you last week, I think we're back to 1987, summer of 87 before the crash. That was just coincidental that it was before the crash.
It sounds like, I know, those symbols, they're all there. Those were the 1987 symbols, right?
Totally. The ones that have been in the Dow, not all of them now in the Dow, of course, but they were. So that's one thing. Now, the thing that I spoke about was patterns that we need to be looking at. And within that context, if you look at, so let me just show you this, because this is going to be very important, because with the gold and silver, I'll show you something. Look, so this pattern that I talk about, straight line up, straight line down, cup formation or arch formation, or a mix of 1 and 2 and 1 and 3. This is the dreaded H pattern, where it comes down sharply, it fails, and it takes out the left side low. This is the green. This is the reverse Y, when it takes out the top of the left side high. That's really important. But when it fails, it makes a double top, which is something very important. So let me show you something here. So we're looking now at gold, and we still have our gold position. And the gold is rallying. It's rallied to 45.84. It was a peak E. It was what I call a channel wave 2-bar reversal with just a fractional difference between the two highs. Pulls back. But look at the GDX. I think this is the pattern that we've got to look for. You remember the H pattern I just showed you right here? Comes down sharply, and then it rallies. And if it fails at a peak A or a B and takes out that left side low, that's going to be very important. So if gold, the GDX, by Tuesday, by next week, anytime next week, if we've taken out 85 on a closing basis, that's that dreaded H. So you've got to be careful of that. It's the same thing for silver. Also, we've got a peak F in the GDX and a leg D, which has gone to possible peak D if there's no new high this week. So that's one of the patterns that I was speaking about. I mentioned that in my webinar. I showed some of the patterns that we're looking at. So this is the same thing. Now I'll just add this quickly because, too late. So this is the pattern. I think we've made an internal high, and we are making a residual high right now in the Dow. I think there's upside, limited upside at the moment, and I think we're going to go sideways, and I think we're going to be very choppy for part of January.
Great stuff as always, folks. To get more Basil's great insights, check it out on the front page. You get those webinars, comes with a 30-day money-back guarantee. Basil, Happy New Year, man, and we'll look forward to the program tomorrow. Have a great one, Basil.
Thank you very much.
Thank you. Stay tuned, folks.